Add the purchase of inventory with the help or use of. Time to turn the page with Sage Business Cloud Accounting. Here we are in our Get Great Guitars summary page within Sage. We're going to be opening up our financial statements, going to the reporting drop down, opening up that balance sheet. Once open, we're going to be duplicating that tab up top, mousing over the tab up top, right-clicking on it, and duplicating that tab. We're going to go back to the tab to the left, do the same thing for the P&L, profit and loss income statement, hovering over the reporting, going on down to the P&L, the profit and loss. Once open, we're going to mouse over that tab up top again, and we're going to right-click on it and duplicate it. Then I typically like to check the dates. I think they're okay in my system, but we're looking at, I'm going to pick this up at 12/31/2020 for the balance sheet. Income statement, going on back to the income statement, is 4/1 is going to be the start date because I just want to see the information for April, the current month we're working in, and there's nothing after April, so I just end of the year is fine. So that's what we have so far. We're going to go to the first tab then, and we're going to be taking a look at the banking information. Within the banking information, we're looking at the bank feeds that we have added. We have 8 left in the feeds. Now we want to consider the inventory item. So no, inventory is another one of those things that would force us oftentimes to deviate from the cash basis system. So we got to think about how are we going to deal with inventory. So if you have inventory, you got to think about how you're going to deal with inventory. If you don't have inventory, then it's a little bit more straightforward. So the vendor down here happens to be the vendor that we are going to be dealing with inventory for. So we purchase guitars, we're imagining, and we're going to be purchasing a guitar from Fender. Now, last time, if we go over to our flowchart, this is on QuickBooks Desktop, just to see the flowchart. That's the only reason we're here. We just want to look at the flowchart here. If we're thinking about inventory, note that there's a couple ways we can track it. The full service perpetual inventory type of system can be done within Sage, and that would be a system where when you purchase the inventory, you put it on the books, not only on the financial statements as inventory, but also on the books supporting the inventory by item. So it'll track the items, give you an inventory report, in our case about how many guitars we have, and so on and so forth. Then when we sell the inventory, we would do so with a sales receipt or an invoice or sales receipt, and that invoice and sales receipt would record the sale, the accounts receivable or cash, and would also record the decrease in inventory and related cost of goods sold as we make the sale. That would be a perpetual system. It's a bit more complex to use a perpetual system, but that will give us a clean perpetual inventory that will be tracked as we go. Or we could use a periodic system. Periodic system is going to be easier to use the bank feeds with, and that system we're going to put it on the books when we buy the inventory as inventory. But we're not going to use Sage to track the inventory, to count the inventory. We're going to physically count the inventory some other place. And then when we create the sales receipt or invoice, we're not going to record the decrease in inventory and the cost of goods sold at that time, but rather just record the sales side of it. And then we're going to record a periodic decrease in the inventory and the related cost of goods sold as we count the inventory at the end of the month or the year or the month or the week or the day or whatever it may be, in a periodic type of system. Or we can do a complete cash basis system, and we could say, hey, look, we don't hold on to that much inventory. I'm just going to expense it when we purchase it, right? That would be a cash basis system. And that's what we did in the first month. In the first month, we did a complete cash basis system. We said, hey, I'm just going to do this as easy as possible. I don't have a whole lot of inventory. When I buy it, I turn around and sell it right away. So right when I buy it, I'm just going to expense it, as cost of goods sold at that point. And then when I make the sales side, again, I don't record the decrease in inventory. I just record the sales side, and the two will match out. And after it's just a timing difference between the two, so they'll match up after time. And this time we're going to do the periodic system where we will put it on the books as inventory, and it's going to take another step, right? Because we're going to have to count the inventory and then make an adjusting entry in a similar way that we talked about with the prepaid expenses for insurance. We'll have to actually count the inventory at the end of the period, see how much of it has been consumed, and then we'll decrease the inventory with an adjusting type of entry for it. So it's a step up from just a cash basis system in complexity, because we do have to record it as an asset and then have an adjusting entry, but it's not as complex as a perpetual system where we would be tracking the inventory with each transaction, each sale within the Sage system. And again, the Sage system does have the capacity to do that. It's just a question of whether or not you want that in your accounting system with regards to ease of the accounting system and how the flow is going to work and how you're going to work in the bank feeds for it. So this time, we're going to go over to Fender where we're buying a guitar. And we're just going to, and this is our inventory or guitars or whatever, and we're going to be putting it on the books as inventory. And that'll increase an asset account, which we're going to have to adjust at a later point. So that's going to be the idea. If you're using that method, then every time you make a purchase, every time money goes out for guitars or whatnot, straightforward process. We're just going to put it to the inventory account. However, you're also going to have to think about how you're going to track that inventory in like an Excel sheet or something like that, right? Tracking the number of guitars that you have and the cost of it in another sheet. So in any case, we're going to say vendor is going to be the vendor. So I'm going to put it here. I'm going to create that vendor. Make sure I hit the create button this time because I'm not sure I've been creating them all as we've done them last time. So this one is giving me a little green thing. You can update this content anytime. Okay, that's an indication that has been created. I'm going to see if we have an inventory account. So inventory, this is the one we want, inventory. It's a 1200. So that's the one. So let's pick that one up. I'm going to say this is an electronic transfer. So I'll say electronic. What's going to happen when we record this? It's going to decrease, of course, the checking account. The other side then going not to an expense account, but rather to another asset account, that being inventory. Let's go ahead and create that and then take a look at it. So we will create it. We're going to go to the balance sheet and calculate the balance sheet. I'm not going to go into the checking account because we know the checking account is going to go down, right? We decrease the checking account. The other side is going to be going into the inventory. So here's the inventory now on the books at the 168. New account now increasing on the inventory. Now, what's going to happen? When is that inventory going to hit the books? It's going to hit the books periodically when we count the inventory at the end of the week or month or a day. We will then decrease the inventory based on the physical count and assume that we sold the difference, right? So we'll then mark down the inventory to the physical count, the other side going to the cost of goods sold, the income statement. Therefore, at this point, at the point of purchase, if I update the income statement, nothing has been included on the income statement thus far. This is different than last month, where last month, what did we do? We've just recorded the inventory straight to cost of goods sold right at the time of purchase. And that's a little bit easier. That's a cash basis system, right? That meant we didn't have to decrease the inventory to a physical count. We just expensed it as at the point in time that we purchased it. So that's kind of the two methods, perpetual versus cash, and then you've got the periodic versus cash, and then you got the full perpetual system, which means you would track it, with each transaction, which is another step away from the cash basis system and relying on the bank feeds. Okay, I'm going to go back to the first tab here. I also just noticed that I didn't pick up the staples. I mentioned staples before, but we didn't pick it up. So I'm going to pick that up now. I'm just going to say that's going to go to office supplies. That's kind of a standard type of expense. Every time we go to staples, pretty much it's going to be going to office supplies unless we purchase something large where we might have to capitalize it. So we'd want to take a look at the dollar amount. And I'm going to put this to office supplies. So I'll pick up the office supply. I'm pretty sure I did this. I just must not have hit the create button. I don't think I created it. So I'm going to create it now. I'm going to make this an electronic transfer first, and then we're going to create it. And so that, of course, will decrease the checking account, bouncing over to the balance sheet. It will decrease the checking account. So if I update the checking account, we will now be at the 169,397. And then if I update the P&L or calculate it, I want to use their terminology. It's not an update. It's not a refresh. It's a calculate. And so if we recalculate down here, we're going to say the office supplies then appears here as well. Now, I will be providing you with the or the trial balance periodically, so you can kind of check your numbers if you're working along with the practice problem with that. So be aware of that. But that's it for now. Let's get out of here.